If you'd like to see more of our videos, please subscribe to our channel on YouTube. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today's May 7, 2020, and today is Thursday morning. So looking at the major highlights of the day, Dow Jones retraces yesterday after the ADP non-farm payroll coming out, and we're watching the euro on the bottom of the range. But first, let's take a look at our economic schedule today. So we're starting out at 8 a.m. South African time, GBP official bank rate number coming out, and then later today out of the United States, weekly unemployment numbers coming out. Now, these weekly unemployment numbers are in the shadow of tomorrow's NFP, which is really a major number, and it could be a non-major number tomorrow. And the reason is because over the past 4 weeks, we have had weekly unemployment numbers coming out, and it's all kind of digested in the market. Everybody knows that there's about 20 million people out of jobs in the United States right now on unemployment. That's a big number. And with that said, it could be already factored in. Now, jumping into the markets, first looking at the euro on the bottom of the range, while GBP retraces as well versus the US dollar. We're watching the Dow Jones retracing after this ADP number, while the NASDAQ still very, very strong. Remember, the NASDAQ is a composite in the United States that consists of all the high-tech companies. Now, looking at the commodities, gold and oil retraces, while we're watching the stocks, the FANG stocks, the Facebook, the Apple, Amazon, Netflix, and Google, all remaining very strong, while the JP Morgan, which is the bank stocks more on the Dow Jones side, is retracing. So there's a little bit of a parity there between the NASDAQ and the Dow Jones right now. But let's take a look at the markets and see what we can expect from today's trading. So we're going to first take a look at the Euro USD, and we're taking a look at a daily chart. You can see we're back to this level, 107.82. We did break this 108 level. Okay, so as long as we don't break this 107.82, we may see ourselves just trading within the range. Upper limit 109, lower limit 107. It's a 200 pip range, nothing to really write home about. Now remember, okay, this was the debacle of the coronavirus happening. So relatively, look at these parameters, 114 to 106, where we're trading not even a third of it, okay, just about a third of it, which is about 200 pips altogether. So just be aware that we are in a tighter range right now. So you should really just adjust yourself if you do decide to trade the Forex symbols. Now jumping into the GBP USD 4-hour chart, you can see we get a little bit of a perk right now just because of this number that's coming out, the official bank rate coming out. Let's see if it does fade it. Okay, with a anticipation that it's going to go further down, as this is looking like it's joining the euro further down. Okay, looking at that all together. Now jumping into gold. All right, we sold off yesterday to 1666-ish level, just a retracement. Remember, we're still within our two parameters. Okay, the upper limit here at 107.32-ish level, and the lower limit at this 106.80-ish level, which we are trading right now. 106.70-ish level is the lower limit. So with that said, okay, we're still within the parameters, nothing to really jump at. Okay, maybe look to actually buy this at this area if it does retrace another 10 points in anticipation that it's going to continue trading within this range. Now jumping into oil. Now this has been a roller coaster ride over the past 2 weeks, obviously. If we look at a 1-hour chart, we did have a massive rise from last week to this week. Okay, over 115% on the upside. Okay, it was trading at $10. Now it's trading at $25. Okay, within 1 week, that's amazing. Okay, now people could make a fortune in just a 1 week trade of this. Okay, and you can't fight the trend as this is continuously breaking up, held above our moving average, especially the 14-day moving average most of the week. Consolidated at a certain point, didn't really break it down, and then continued going. However, we hit $25 a barrel. Now, $25 a barrel psychologically is a major number. I do expect it to trade between the $25 and $20 range, okay? Both because, the lockdowns are easing, but we're not out of the woods yet, okay? We still have some ways to go before we could really claim ourselves back into somewhat of a normalcy in, the consumption of oil. Now, jumping into the Dow Jones, this is what I'm talking about. Yesterday, we had this fake out breakout, if you call it, okay, down to 24,000-ish level, and then we just broke it lower. So this does look like it's getting itself into a little bit of a trouble here, as it may be producing a downward momentum. Okay, altogether, it's not a pure head and shoulders. Okay, so I don't want to say that it's a head and shoulder formation, but it is looking like it is taking a little bit of a retracement. Now, tomorrow's NFP. Okay, there's not going to be much of a surprise that 20 million people in the United States are out of jobs, but the ramifications of that. Okay, how long will it take for these people to get other jobs? How long will it take these people to, kind of bounce back? Okay, is going to be a major factor. Now, there's a lot of things that happen with unemployment. Death rates go, suicides go up, just naturally. Unfortunately, that's an unfortunate situation. So the fact that the United States wants to reopen very quickly and wants to get back to normalcy very quickly is understandable, because, with the coronavirus happening, there's a big death rate there, about 6%, 3%, depending on which country, which part of the world you're in and which state you're in. But there's also a death rate when there's people in unemployment. Okay, there's a suicide rate, unfortunately, because of that. So, it's a balance between these two numbers. Okay, obviously, it's people's life at stake here, and that's really important. So I think that the markets are trying to get back to normalcy as much as possible. Now, when we look at the markets, okay, watch this. Where it is that the Dow Jones has retraced a little bit here, as you can see. Okay, we're in somewhat of a retracement here on a daily chart. When we look at the NASDAQ, it's on its close to its dead highs, only 300 points off of our all-time highs. Okay, so it's not, 700 points off of our all-time highs. So this relative to the Dow Jones has been very strong. When we look at Apple, okay, we see a resurgence there. Okay, it's only down about $20 from its all-time highs. When we look at Amazon, obviously very strong, even into this atmosphere that we're in. Microsoft, let's look at it on a daily chart just to give us a perspective. We're trading at 182. Our high is 189. Okay, only 7 points away. So you could tell by the fact that these stocks, these high-tech stocks, are very strong, that they may continue on the upside. Now, Facebook also very, very strong, only 20 something dollars, less than $20 off of its highs. However, when we look at JP Morgan, it's flat dead. It's at $90, okay? And it's at the bottom of that range. So you've got to be very selective here. I don't want to celebrate that we're after, the tsunami here. I don't think that we are. I just think that some of the numbers are already factored in, and I don't expect the volatility that we had 2 weeks ago. Now, in the next 30 days, I do expect some volatility to begin again, because I think that that will really be a telltale sign if this current situation is going to be lingering, or we're going to have a quick response. Remember, people want to go back to work. The businesses want to open up again. So we're going to try and do that as quickly as possible. This is Fred Razak. I want to wish you guys a great trading day. Thank you.